Welcome traders to the Polaris Trading Group PTG University Indicator Review. Today's indicator we'll look at is the Accumulation Distribution Indicator, also known as the Cumulative Net Delta. The Accumulation Distribution Indicator filters specific volume footprints of the big money trader, Mr. Big, and tracks their movement throughout the auction process of price discovery. Successful traders have learned to follow the money flow, and this indicator is designed to uncover the stealthy footprint of Mr. Big. Okay, so let's just get right to the charts here. And this is a chart of the S&P E-mini futures on a 1500 tick. This will be the intraday session chart with the accumulation distribution indicator in the subgraph window. Now, normally, the accumulation distribution indicator, i.e. the cumulative net delta, coincides with price. So as prices are moving higher, one would expect and anticipate that the cumulative delta, or the accumulation of buyers, continues to rise, and that's normally the case. And as well as when price falls, again, one would assume that the sellers getting more aggressive are on a net basis selling, and that's normally the case as well. There are instances where prices are moving up and the cumulative net delta accumulation is not keeping pace, so that's starting to give some warning signs in terms of the amount of fuel being able to push price higher is getting less and less on balance. And also the slope of the indicator is important. We like to see a rising slope as prices continue to rise. If prices are rising and the average cumulative delta is not, then that tends to be a warning sign. So we'll take a few examples here throughout this chart, and let's see what we can uncover here. We'll just start here on the left-hand side, kind of a consolidation zone. As you can tell on the accumulation distribution indicator, volume had pushed prices higher up into the zone, and for the most part it was consolidating sideways. As you can see, right about at this point on the right side of that consolidation pattern, you can see that the cumulative net delta switched from green to red. That fat line there, that average line, is the average cumulative net delta, and that started to weaken, okay, as price entered into this next session. Price tried to rally again, and to no avail. Sellers took dominance control, and ultimately the price moved down. But prior to the price moving down, you can see how the accumulation distribution here switched from an accumulative posture to a distributive posture prior to the price moving lower. Price found its low, and then buyers re-emerged, okay, and then as you can see, prices moved higher on increasing demand, okay, and that was confirming that these higher prices were even attracting additional buying interest, moving prices higher. So again, big money players, smart traders, they want to follow the money flows, okay. So with this accumulation distribution indicator, okay, allows the trader to stay on the correct side of the action, confirming price with volume, okay, and staying and having more confidence to trade a particular side, either long or short. Okay, and as we move on a little bit further here, okay, after the price has made a decent move, consolidates a little bit, as you can tell here that there was no further accumulation coming in. The money flows just really flattened. Okay, so this was an opportunity had for earlier longs to take profits. And as you can ultimately see here, there were no further buyers coming in. There was a last gasp here on the accumulation distribution, and it was far below the prior peak. and that last gasp on the buyers pretty much completed this pattern, and then the sellers became much more aggressive. And again, following the money flow keeps you on the correct side. Okay, I just advanced the chart just a little bit to show one more example here. And in this example here, you can see that prices had more or less established a range-bound type condition where price kept pushing up to the upper part of this range here. And normally, if you're just looking at and reading price, okay, one would think that perhaps this is setting up for another leg higher. Underneath the surface, okay, you can see that the accumulation distribution indicator started sloping lower, and each push down in price was associated with a little bit more aggressive selling. And then this rise in price here, as you can see on the accumulation distribution, did not really associate with any real strong buying. Same thing here, another push up, very little buying. The average accumulation distribution shows more distributive price action in this price region up here than there is accumulation. And one last one, price pushed down, bounced back up, and this was a clear sign that all the smart money was actually selling this particular price bounce here. So the accumulation distribution indicator can be used in a variety of ways. One, confirming price action, giving the trader greater confidence to stay along with the price move. Also, it can be used, of course, as a divergence indicator, uncovering the very stealthy buying and selling on a net basis where prices are either being accumulated or distributed. Hence our name, the accumulation distribution indicator. So hopefully you enjoyed this review, and we'll see you at the next indicator update. Good trading, everybody.